This day trading strategy makes me over $1,000 per day, and not only is it insanely easy to learn, but it only takes around 10 minutes of your time to actually implement into your trading. Let's go. This strategy is called the order block strategy. And the way that it works is by finding big gaps and big areas of orders and using those to my advantage, right? So what does that mean? Well, when we're looking at a chart, you're going to see that there are sometimes very clear ideas and areas where we have rejections, right? And so, for example, this is one of those big areas of rejection, right? You can see we have a clear move here, and immediately afterwards, when we retouch that area, we have another massive move off that area. First things first, guys, an order block, right? Like I showed you guys earlier, it kind of looks a little bit like this. We come up, we retest an area, we make a move, come back up, and then we make another move, right? Similar to supply and demand, but we're going to go over the exact order block and what it is right now. Okay, so first things, guys, I want you to understand that we are not the ones who control the market, all right? There are big people with hundreds and millions of dollars that are in the market that are not us, right? And if you have $100 million and you're watching this right now, my bad. But for the time being, I'm pretty sure none of us have $100 million, but the ones who do have $100 million are the ones that make the moves in the market, right? Anytime you see a move like this, for example, is going to be made by someone who has way more money than us. And so my goal and my job is to hop in with those guys and make money with them along with that move. So that way I can guarantee myself some profit along the way, right? I want to guarantee myself a little chunk of that move so that I can stay profitable over time. And that's exactly what I'm going to show you today. So when we're looking at this little box here, what I want you guys to pay attention to is I'm going to call this guy, I don't know, we're going to call him Little Timmy. All right. Now, Little Timmy, when we are moving in this pattern here, so we're going, and right here we see a massive move start to form. Little Timmy at this area has $3.5 million in puts. And you could say in shorts, in puts, in sells, right? Whatever it means when the stock market's going down or the Forex market's going down, whatever market you're trading, saying puts just means the market's going down and this guy's got a sell order at that area. So if he has a sell order at that area and this market ends up making a massive move down, but he's not able to get filled on this order, right? His order is not able to go through successfully. What does that mean? It means that there is a block of $3.5 million in puts available, right? And so what do you think is going to happen when we come all the way back up, right? Let's say we fall all the way down, we start making our way back up, we touch this order block again. Well, guess what, guys? Remember who had $3.5 million in puts available? Little Timmy. So what's going to happen? Those puts that he had valid at that point will then get reenacted, right? Or not reenacted, refilled, right? So they'll be filled the second time around, and that is what causes the second drop. So all we want to do is we want to make sure that we're following along with the overall trend and following along with what the big dogs are doing, right? The big dogs are the one who control the markets. They've got the most amount of money. They're the ones who make the big decisions. So all I'm doing is joining them, okay? That's the strategy I'm going to teach you today. Joining them, being on the right side of the market. This is why this strategy has such a high win rate. 1 hour time frame. You need to switch to the 1 hour time frame. And how you do that is by coming up here on TradingView, clicking the 1 hour, or clicking the number that's there and going down to 1 hour. All right. Now, this course that I'm recording, by the way, is all done live. So obviously there's going to be, maybe I'll mess up here and there. I'll just correct myself and keep going. It's all done live. Okay. So I want you guys to understand that I've got an audience literally listening right now. Okay. So one thing that we're going to pay attention to is areas that have a large break of structure or a large change of character. And so what that means essentially is we've got a trend like this, right? Trend. What we want to see is an area that comes up and breaks structure / changes character. So this is a change of character, right? When we change character to the upside, it means that we have broken a lower high that was the lower high that was previous, right? So we've got lower high. Here's another lower high. When we break that lower high, it means that we are having a strong push for upside momentum, okay? Strong push for upside momentum means that we're starting to change trend to the other direction. So when we have that change to the other direction, what we want to do is find the candle before that massive move that is in the opposite direction. So right now my candles are white and gray. And so to use these candles correctly, what we want to do is make sure that we find the candle that's in the opposite direction of the candle right before that massive move. So as you see, this is a massive move to the downside. What we want to look for, candle right before that candle that's in the opposite direction. So this is the first candle. It's green, right? First candle is green right next to it, okay? Now, I'm going to write this down for you so that you have this clear. You want to find that candle, step 1. Find candle before change of character. Step 2, draw block on candle. And I'm going to make a few notes here. So for a bullish order block, you are going to have to draw from the bottom of the wick to the top of the candle. So bullish order block, bottom wick, top candle. A bearish order block, top wick, bottom candle. Okay, so top wick, bottom candle, right? That's how you draw. So when we're looking at an order block here, what type of order block is this? Is this a bearish or a bullish order block? Well, we've got ourselves a bearish order block. So what you want to do is you want to draw from the bearish order block, top wick, bottom candle. Easy. Top wick, bottom candle, and extend that out. And now you've got yourself an area where if we come up to it, we're most likely going to have a reaction at that point. So we're going to do it again right here, right? For example, let's say down here at this area, massive move, massive move. We find the candle before it, and this is a bullish order block. So we want to find top of the candle, bottom of the wick. There's the candle right there. Extend it all the way out, okay? Now, this is how this is going to work, okay? What we want to do is we want to make sure that we find all of the ones on the 1 hour that we possibly can. Now, like I said, break a structure or changing character. So for example, for me personally, I do like this because this is breaking structure and continuing with a massive move. And I'll talk about why this is even more valid in a second. But for the time being, this is how we're going to draw this structure, right? We're going to have it built like that. And let me see if I can find another one for you guys just to make life a whole lot easier for you. 1 hour time frame. You find the candle right before. As you can see, it's right here. Boom. Boom. Draw that out. Okay. Let's go with this one here. We see that there's a massive move that breaks structure or changes character here, actually. We want to find the candle before it. That is right there. And we want to draw that out, right? Draw that out. So you can see that this was another example here as well where we had a change of structure here as well. So you can see, boom, we've got ourselves that order block right there. And as you can see, this is a perfect example of how that order block actually works. We came all the way back up, retested that order block, and continued. Now, let's go over, and we can draw one more. Here we can see 1 hour order block, boom, right there. Bottom of the candle body, top of the wick. When we extend over, we have that massive move. It reverses off that. There's probably one in this area too, okay? So you can see this is an area where we have an order block most likely. This is an area where we reject. We have an order block here, and as you can see, we come through, reject off this, reject off this, reject off this, reject. So we see that there's a lot of reactions occurring up at these order block areas. So if you're able to use them properly, you can see that there's a massive chance for you to be in the green and positive pretty much on any position you take because you'll know exactly where the market's going. Now, a better way to get an even more consistent position is to lower your order blocks to a different time frame and get more accurate with them. So for example, let's say we have this area here, right? For example, we can get even more accurate on this by having this as our order block candle, right? It's just kind of making the order block candle a little bit smaller. And so let's say we've got this order block here that has a massive move that breaks structure and another order block here that has a massive move that breaks structure. You can see that with the 15-minute, we get a little bit more accurate and a little bit more consistent. As you can see, boom, now we know exactly what's happening. We know exactly where we reject. We know exactly where we move. So as you can see, this is where you get a really nice trend. And we even have a perfect reaction off of these order block moves there. So if you're able to draw these order blocks out on a lower time frame, you're able to get a much better and much more precise order block. So for example, here's another example of that. Boom. All right, we can adjust them on the 15-minute. I do not use the daily. I don't use the 2-hour. I don't use the 4-hour. I use those two time frames to draw order blocks, 15-minute and 1 hour. I don't use the 5-minute. I don't use anything else, just those two time frames. So when we draw those out, though, you're going to notice that we have to do a few things. We have to either wait for the position to come up to the order block or down to the order block, right? I don't take positions unless there is an actual order block present. And when we come up to the order block, we need to make a decision, right? Now, how does this decision work? What we need to do is we need to find a move at the order block that actually ensures that we are going to go in the direction that we want. And how does that work? Well, we got to go based on reactions. Reactions, right? Based on reactions, we can see whether or not the move is going to go our way. So if we have a line right here, there's a few different reactions that we like. One is going to be this reaction where we break, retest, and continue, okay? Second is going to be where we come through, we break the order block, we reject and break down, retest, and continue. That's going to be called a fake breakout reaction. This is a break and retest reaction, and we're obviously going to have the good old rejection, right? And it's the same thing for the bullish side too. I'll show you, or yeah, same way for the bullish side too. So as you can see here, it's going to look like this. Boom, boom, boom. That's the bullish side. It's going to look like this. We're going to fake to the downside and then continue up. And then we have a straight bounce, right? So those are the 6 most common reactions that I see at a level. And so you want to make sure that you can pretty much identify what's going on at that order block. So for example, if we've got ourselves an order block here and we're coming up to this order block, how do we know whether or not we should get in? So if we come up to this order block here, we want to see what happens when price comes up to this area. This is where you're going to start using a little bit more price analysis, right? You need to start analyzing what price is doing when you get up to your order block. No more entering just off of like random hunches or entering as soon as you get to an order block or as soon as you get to a key level. You need to actually enter based on the price action you're seeing at that level, okay? That's going to be the most important thing that you do as a trader is understand your reactions and understand what's happening at a level. Because if you don't know, then why are you taking a trade, right? So when we're at this level, you can see, let's say we come up to this area, but then we start slowing down and we start having price action, you know, flipping like that. That is a possibility for us to get into the downside or into some shorts, right? If we see something like this, that's not a strong reaction. It's weak. It's a weak reaction that doesn't actually give us any understanding of where the market's going to go. But if we see one of those 6 reactions that I told you, then you can take a trade successfully and know exactly where to go because you know what the trend is and you know exactly what direction the market is going, okay? So same thing goes here. Let's say you want to enter a long position. When you do have that break and retest, one thing you got to understand is when you do place those entries, your stop loss is going to go on the other side of the zone. Other side of the zone, that's where your stop loss goes. That is how you're going to get the most successful position. Because let's say, right, what you got to do is you have to have a stop loss that actually genuinely invalidates your position, okay? Now, if we come up and we have a nice move here and we retrace and we start breaking out of this order block, okay? We start breaking out of this order block. We got a solid move here. Why would I exit this position anywhere inside of it, right? Why would I? I need to wait until this position actually is invalidated. And as you can see here, when we break out of the order block to the downside, let's say that this is not the move that happens. Let's say we come up, we break down, we retest, we continue, and then we start making this move. Why would I stay in this position if we start breaking to the order block to the downside? It's not a smart decision, right? So if we come up and we retest and we break down like that, I'm out. I'm not going to hold this past the order block because there's a really strong chance this is not going to go your way, okay? So your stop loss always goes on the other side of the zone when you're taking these order blocks. Now, one question that I always get, and I've actually seen a couple of you ask this question already, is how do you know when an order block is valid and when an order block is not valid? Sometimes you're going to see that there are order blocks that are valid, and sometimes you're going to see order blocks that literally just aren't valid. Like I said, if price action is dancing like this, there's not a strong reaction at this level, which means that the level isn't as valid as it once was, right? So the way that this works is that there's a certain amount of liquidity at this area, okay? So let's say there's $5 million of liquidity, right? Every time we touch this area, we're going to see a minus sign on that amount of liquidity. So minus, 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 right? This, let's say there's $5 million here. Let's say we're going to have $1 million minus here, $1 million minus here, 3, 4. What's going to happen on this fifth time, right? What's most likely going to happen is we're going to break and continue to the upside. And why is that? If I stand up right now, right? If I stand up right now and I start stomping on the ground as hard as I possibly can, it's not going to do much. But if I stand up with 7,000 people and we all stomp on the ground, what's most likely going to happen is, you guessed it, exactly, you guessed it, we're going to fall straight through, right? The same thing goes with the stock market. If we've got a level of liquidity or we've got a wall at an area and you've got 7 million people buying in the exact same spot, well, guess what? It's going to fall through, okay? You're going to fall through. It's almost guaranteed. So if you're starting to see price action where we come up and we're just like failing over and over again, we don't have smooth moves, well, then you're not going to have a valid order block because this has already been used. All of this liquidity has been used already. Now, another way of telling that an order block is very valid or not valid, and we're going to go to the 1 hour so I can show you this, is based on if there is a fair value gap present. And what a fair value gap essentially is it means that the price has not been mitigated at your area. And so what I mean by mitigated, and I'll explain this, I know there's a lot of words coming out. Don't worry, stay here, don't get bored. I know you're watching this and you're like, what the hell is this guy talking? Don't worry, all right? So let's say you've got an order block right here, right? I drew this. We got ourselves a beautiful order block here. It's got a massive move. As you can see from this candle to this candle, we did not have price come up and touch these wicks. What does that mean? It means that this price has not been mitigated. And if the price comes back up to this area, then the price actually is mitigated and has a chance to continue to the opposite direction. But for that time being, we're probably not going to continue until we touch that fair value gap, right? So if you have a fair value gap, what it means is that we haven't mitigated price in this area at all, and we most likely are going to have a bigger reaction at that area because a lot of people are going to be left behind on a move that is so quick that it creates a fair value gap, all right? So that is exactly how we can use these order blocks and these little areas of liquidity to actually enter positions and know exactly where the market's going to go. Now, where are we going to target whenever we use these order blocks? Well, we want to target, ideally, the next zone down. It's very simple. We want to target the next zone down. Stop loss always goes on the other side of the zone. We want to target the next zone down because one thing that we know is that there's resting liquidity here, there's resting liquidity here. So we want to take one from one area to the next, and we want to use the resting liquidity there on both sides, okay? So that is exactly how you enter, exactly how we know an order block is valid, how you know exactly when to actually get in, you know when to get out, you know everything about order blocks. If you're seeing all this and you're like, oh my God, this is incredible, this is some good knowledge, well then you might want to get in this and actually learn my strategy from start to finish because I've got more steps in here, then I've got more rules, and I literally walk you hand in hand. So if that's what you want to do and you want to join a one-on-one mentorship from somebody who actually has made 6 figures trading, then go down to the description and click on my website and apply. That's all I got for you guys. Peace out, everybody. Later.